Good morning. It's Monday, September 26, 2022. It's about 9:12 a.m. Eastern Time. And back trying to get some pre-market videos done, talk through what's coming. But since it's late in the morning, I'm going to hopefully really pull off a short one here. So the couple key things coming into today, all the indications are that things will go lower. However, we often know the market doesn't do what we expect it to do, right? So want to look at a couple things that argue for the bullish side. At some point today, we're at a critical juncture as far as a wave count, this being an impulsive wave up and this being a zigzag correction, wave one, wave two. We have not broken the rule of trading through the terminus yet. In fact, this performs pretty well as a zigzag. The only thing I don't like about it is that this gap down is a little bit more of a slope here, but we were strongly rejected out of there. These are regular trading hours, okay? So we've got the 36.39 level, which is sort of the demarcation point of where this will be broken. So that may not, even if we trade lower this morning, it's quite a ways to go to get down there and break through that. All right, the other thing to keep in mind, another key thing today, is that the VIX is, we haven't been over 30 in a while that I recall, and it's at 32.5 last I checked. 32.5, that's, it's a Monday, so this could be expected to be a very volatile, choppy, because we are opening in range and right now in value, and that makes for a very choppy environment that can be a lot higher risk, so it might be better to trade later, let some things set up, be very selective, and B, when we do find a trade location, make sure, if it's a level, that there's some things that are confluent with it, and that you've got good structure for your stop that falls within risk parameters. It's very easy in FOMO to just place the trade where you believe it's going to turn, or where you want to get in on a reversion or whatever it is, and not think about the risk a little bit later. And today's probably not a day to do that without experiencing some pain. All right, so moving right into the stories. Again, we're right in range and in value, right dead in the middle. Overnight market is still, it's neutral to net short, I'd say. Anyway, so here are the stories. All right, let's just get right into it. Story one is we open in range and value. When I wrote this, we weren't quite in value yet, so that's worked out. And we remain in balance. So we're looking for mixed, neutral, and market internals, slow tempo, which I don't expect a slow tempo. Again, it's in range and value. It's a Monday, high VIX. It's probably going to be choppy. So this, remaining in balance and looking to trade edges, they'd be very careful. That's all I can say about that. The next thing, on this daily chart here, if I was to make this a, let's see here, graph draw, candlestick bars. Why did that not change? All right, I don't know why that didn't change, other than I think I have graphic global settings. It doesn't matter. This is a hammer candle. That's what I'm trying to say. Okay, so that's a hammer candle, and that has a 60% success rate as a reversal. And one of the things that can be expected if we do break out of the upside is that it's like a measured move. So it might go 100% of the range. And according to Bukowski's statistics, it will reach that 88% of the time. I may have written it down wrong on here. I think I wrote 88% of the range. But hey, let's leave it. Maybe it'll do that. So hammer reversal in play. So if we break out, the strategy is to develop value overlapping to higher and take out overnight high and prior high of day. Actually, this would fit more under conditions, and look to reach the extent of prior day's range. I wrote 88% of prior day's range, but it was still early. But hey, what if it works out that way? Nice, okay. Now, 60% is not much better than 50%, really. But if we start to take out the overnight high and prior high of day and all that, be looking for this. That's the story that may play out. That's the idea. All right, open range and below value. That does not look like it's going to happen. So let's skip that for now to make this video shorter. Then story 4 would be to reverse on or near value area low. So that means that if we open in range below value, but if we do trade below there, that would be if we come out of range and get below value and it does look like it's moving to the downside, I would look for a modification of this to where reverse near value area low or prairie dog value low after we trade below it, come back in it and get rejected again out of it. So we want to short from the value area low to the other side of the overnight value. Let me show you what I mean. We got to take things a step at a time. So this purple area right here, this is the value area low at 36.78 quarter. It looks like actually just moved up a tick, I think. So right here from the value area low, so that's 86. That's 70. That's about 8 points. So look for a move down to there. This could be a nice piece. And then we have a poor low in the overnight, so that's something to be mindful of. And we could trade all the way down through there. So there are some swing lows, and these are possible bounce points, reversal points, so look out for that. They're also possible acceleration points, so it just depends on how it moves. And then lastly, to take out the low of day from Friday. And now I'm not going to be able to talk about this much to keep this a short video, but if we take out the low of the day, the strategy would be to look for longs based on the condition that the market internals, tempo, the way the value is developed and everything do not support sustained trade below the prior low a day. Okay? Now let's not mistake the prior low a day with the low way back on June 17th, which is the origination point for the move up of wave 1. I might have said terminus earlier. We don't want the terminus of wave 2 to go below the origin of wave 1. That's the point. So anyway, there are inflection points below, and to really define them for yourself, you want to go back to June 17th on the profile chart and look for things. So look for a floor trader trade against inflection points or resting orders. Resting order would be just a limit or market of touch that's just sitting there on a level that you think it's going to reverse from. This can work, but you might take some heat. Possibly a better way to enter would be you might miss it, but it will come down to your level and it trades through it, gives the heat, comes back through your level, and then comes back down again on a reversion to that level and then get in, right? So that's the market stories for today possibly. And again, it may be good to just kind of get all set up, watch for a while, take a break, come back. I don't know that I'm going to practice what I preach. Depends on what happens, but I definitely want to be a little more careful coming in today. All right, make a great day, and maybe I'll see you later. Bye.